Well, as we have been reporting, the jobless rate coming in at 9.8%, 263,000 jobs lost. That is much, much worse than expected. Let's get to Richard Yamarone, though, who's an economist at Argus Research, and he had forecast 260,000 jobs lost. So he was the most accurate forecaster for this month. And Richard joins us on the phone now. Thanks so much for being with us, Richard.
Oh, anytime.
Okay, so you got this prediction correct. What do you expect for the months coming? Are we going to be hovering around these levels then?
Oh, I think this is not surprising simply because this is the way the economy is going. We're shedding jobs at a 250,000 pace on average per month, and we had a temporary breather there, some positive numbers coming in over the summer as the Cash for Clunkers program boosted demand for workers. But I think we're about to set back now that the Clunkers program has expired. You're starting to see some of this high elevated unemployment rate start to take its toll on consumer spending and activity, and I think you're going to see the economy pull back a little bit. Not a deep free fall that we were in a couple months ago, but pull back nevertheless.
Does this then delay your forecast for an economic recovery, though, rather than earlier? Let's say by the end of this year or early next year, it might be actually a bit longer before we see that bottom?
Yeah. No, I think that we've seen, quote, the bottom as far as the economy is concerned, economic activity, and probably some, to a large degree, payrolls. However, you're going to start, whatever people are expecting, you're going to see a very strong spike in the third quarter simply as a correction for some of the extreme weakness we've had. But we're still going to be spinning our wheel. The economy is going to be spinning its wheels for maybe late in the fourth quarter and throughout 2010. I see no reason to get excited over that, and I see even a smaller reason to get excited over a jobs creation situation. Again, you got to remember, the government has done nothing to provide an incentive for businesses, small or large, to take on extra workers. They've created a great cushion for them, for those fallen workers, those who are out of jobs, but they've done nothing to incentivize or make someone want to hire a worker.
Well, that's what Chris Lowe from FTN was just saying to us just a few moments ago, that you've got to get small businesses hiring again in order to get that jobless rate down. Then, Richard, what could the Fed do at this point? What more could the Fed do to help the jobs market?
Well, I think that they can. I don't know that it's up to the Fed now. I think it's more of a fiscal policy situation. It's the government. The government can come up and again give tax breaks or permanent tax breaks or incentives for people to take on workers. Maybe it's in those industries, those green industries, or some technology type or innovation type jobs. But for the bottom line is, I don't see anybody incentivized to take on new hiring. So I wouldn't expect to see this job situation improve, well, for a while. I mean, again, we're 22, 23 months into this recession, and we're still hemorrhaging jobs at over 250,000 a month pace.
And Richard, that raises the point for me, because I've been reading some research reports. I mean, are we expected to leave this decade in 2000 with fewer private sector jobs than when we entered it?
I'm sorry, that
we're going to leave this decade with fewer jobs created than we had coming in. Essentially, each decade that we've had, the 80s and the 90s, have had more private sector jobs than in the beginning of the decade, the end of the decade versus the beginning.
Oh, I think very, very, very possible. And you got to remember, we're not going to get up to the peak, which in 2007, we're not going to get to the peak for another, till maybe 2013. Several years out. So again, this is something that we're going to have to get accustomed to. And if you have sluggish job creation, poor job creation, you got to remember, consumers don't spend. I've been unemployed plenty of times in my life, far too many that I want to recall, but I can tell you this: when you don't have a job, you don't spend money. And I don't know where all of these people are expecting this big job creation to come from.
Okay, then on that front, when I'd asked you about the Fed, that this is more of a fiscal policy situation then, Richard, what would you like to see coming out from the White House then?
I'd like to see something directed toward an incentive, in particular for small businesses, because I travel the country a lot. I give about 40, 50 speeches to small business groups, Chamber of Commerce's, Rotary clubs, and they're the ones who run this country. You got to remember that 99. This is not. You can check this stat on the Small Business Association's website. 99.7% of all employer firms in this country are small businesses. They run this country. They're telling me they don't have any reason to expect or incentive to take on new workers. It's very costly to hire somebody.
Okay.
So yeah. So you got to target the small business particular in hiring.
We're hearing that theme this morning. Thank you, Richard, for joining us. Richard Yamarone of Argus Research.